Welcome back, everyone, and thank you for joining the channel. Today, we're taking a detailed look at Applied Digital, trading under the ticker APLD. The stock recently closed at $25.14 after rejecting from the upper range and pulling back toward its rising trend line, suggesting that the stock may still be moving through a broader corrective phase following the Elliott Wave impulse that previously pushed the price above $40. Right now, the price is testing the 0.5 Fibonacci retracement level around 23.48 cents, while deeper structural support levels sit near 2025 at the 0.618 retracement and 1665 at the 0.786 level, which also aligns with a longer-term ascendant. This content is for informational and educational purposes only and should not be considered financial, investment, or trading advice. The information discussed regarding Applied Digital APLD and the broader artificial intelligence infrastructure market is based on publicly available data, analyst estimates, and market opinions, which may change at any time. Investing in stocks involves risk, including the potential loss of capital. Past performance does not guarantee future results. Always conduct your own research and consider consulting with a licensed financial advisor before making any investment decisions. The creator of this content is not responsible for any financial losses or decisions made based on the information presented in this video, trendline that many technical traders are watching closely. At the same time, there has been growing debate around the company's potential partnership discussions and whether certain deals will actually move forward. One reason some investors remain skeptical is because Applied Digital's own statements appear to avoid clearly promising that it will use BW services inside its data centers. When you read the company's language carefully, the wording seems intentionally cautious. That interpretation also lines up with information from local meetings tied to upcoming projects in Louisiana and South Dakota, which suggest that Applied Digital plans to rely on grid power for those facilities instead. Another detail that has raised eyebrows is the shifting operational timeline. Originally, expectations pointed toward a 2028 start date. Then the language changed to late 2028, and now the timeline appears to be omitted altogether, which some market watchers see as a potential red flag. Bulls will often counter these concerns by pointing to Applied Digital's guarantee of Base Electron's obligations, but that guarantee reportedly dissolves if Base Electron goes public or raises just $50 million in a financing transaction. Because of that clause, some critics believe there could be scenarios where Bryant Riley might reduce exposure or sell shares in BW at a very high valuation if market conditions allow, especially considering that he has already sold about $10.4 million worth of BW stock at $9 per share in order to address personal debt obligations. Meanwhile, Riley itself also carries significant debt, which has led some observers to speculate that part of the motivation behind certain transactions could involve creating liquidity opportunities. Of course, these views represent only one side of the debate, and investors continue to weigh the long-term fundamentals of the company against these concerns. From a broader perspective, Wall Street analysts are projecting strong growth ahead. Current expectations call for roughly 61% revenue growth for the remainder of fiscal year 2026 and around 55% growth in fiscal year 2027. If those projections play out, valuation metrics could gradually normalize over time as the company scales its infrastructure and revenue base. For investors who believe that the artificial intelligence infrastructure boom will continue for many years, Applied Digital may still represent an interesting opportunity at current levels. The company has been one of the most remarkable stock performers over the past year, with shares climbing nearly 300% since the beginning of 2025, before recently experiencing a pullback. After that powerful rally, the stock has now declined roughly 30% from the all-time highs reached in January. Even with that correction, Applied Digital has been a strong performer over the past several months, which raises the big question many investors are asking right now: is this the moment to buy the dip? Some analysts believe the stock could rebound, particularly if the broader market regains confidence in artificial intelligence investments. Recently, investors have been more cautious about AI spending and are looking for clear returns on the enormous capital being deployed across the industry. However, the reality is that infrastructure investments often take years before their full value becomes visible in earnings and cash flow. As AI adoption continues to expand, many market participants expect investor enthusiasm to return. And when that happens, companies positioned in the infrastructure layer of the AI ecosystem could benefit significantly. Applied Digital's strategy focuses on building large-scale data centers in strategic locations and leasing that computing capacity to artificial intelligence companies that require massive processing power. The company already has several facilities under construction and additional computing capacity available across multiple sites. While it is generating meaningful revenue today, many investors still view Applied Digital primarily as a long-term growth story tied to the expansion of global AI infrastructure. According to analyst estimates, the average price target for APLD currently sits around $49.83, with the most bullish projections reaching as high as $102 and the more conservative estimates closer to $36. Over the next quarter, the company's revenue is expected to reach approximately $75.47 million. In terms of profitability metrics, Applied Digital recently reported earnings per share of negative 0.7 cents for the last quarter, which actually came in better than the expected loss of negative 12 cents. For the upcoming quarter, analysts currently anticipate EPS to come in around negative 13 cents as the company continues investing heavily in its data center expansion. Over the past 3 months, 14 analysts have issued ratings on the stock, and the majority continue to maintain a strong buy outlook. Although it is important to remember that analyst ratings are not guarantees, and investors should always perform their own research. Looking back at the company's operational performance, Applied Digital delivered extremely strong top-line growth during the second quarter of fiscal year 2026, which ended on November 30th, 2025. Revenue surged approximately 250% year over year to $127 million. However, the company still reported a net loss of $31 million, largely because it is aggressively investing capital to build out its data center network and capture market share in what many believe could become one of the most valuable infrastructure sectors of the next several decades. The long-term opportunity is enormous. Industry projections estimate that the global artificial intelligence data center market could grow at a compound annual growth rate of about 31.6%, expanding from roughly $236.4 billion in 2025 to approximately $933.8 billion by 2030. As artificial intelligence models become more advanced and widely adopted, demand for specialized chips, high-speed networking infrastructure, and purpose-built data centers is accelerating rapidly across the world. All of these factors are why Applied Digital remains a closely watched company within the AI infrastructure space. If the AI boom continues to expand and capital keeps flowing into compute capacity, companies like Applied Digital could play a central role in powering that future digital economy. If you enjoyed this breakdown and want more deep dive analysis on AI infrastructure stocks and market trends, make sure to like the video, subscribe to the channel, and turn on notifications so you don't miss the next update.